What's up, YouTube? Welcome back to another video, Financial Freedom with Cristian Sequeira. In this video, I'm going to be mentioning my top 7 inflation-proof stocks to buy right now. I'm going to be mentioning what exactly is inflation, why I personally think inflation will happen in the near future, which sector in the stock exchange is the safest from inflation. Then I will be discussing my top 7 picks. So make sure you watch to the end, and let's get on with the video. So before I start the video, I just want to remind you guys that I am not a financial advisor. I'm only doing this for fun. I'm some random person on YouTube just making stock videos because I really like stocks. If you agree or disagree with me, my top picks, or anything I'm saying, please comment down below and let me know what you think. And remember to hit the like button and subscribe to the channel. It really helps me out. It strengthens the YouTube algorithm. So let's get on with the video. So guys, what exactly is inflation? Inflation is basically an increase in prices and decrease in purchasing value. As you can see, in 1970, a cup of coffee was 25 cents. If we fast forward all the way to year 2000, the same cup of coffee, same height, same color, same width, same dimension, same everything, is now worth $1. And if we fast forward one more time to 2019, that same cup of coffee in 1970 that was 25 cents is now worth $1.59. On average, the United States inflation rate is 2 to 3% every year. I believe inflation is just a matter of time. The United States has injected so much money into the US economy because of the pandemic that it's just inevitable. Inflation will happen. In my opinion, $3.3 trillion has been sucked up by the US economy, meaning the value of a dollar will slowly start to decrease in value. Like I was saying before, on average, the United States inflation rate is 2 to 3%. But with $3.3 trillion being injected into the economy, I believe 5, maybe even 6% inflation rate will happen in the next 2 to 3 years consistently, meaning the value of a dollar will be worth nothing soon, and the impact through inflation will have impact throughout the whole stock market except one sector, the real estate sector. Normally, when inflation does hit, stocks and bonds are the most affected. The value for stocks will start to decrease if those stocks have very high dividend yield, and depending on the interest rates, bonds will start to decrease as well. So I believe the sector safest from the stock exchange is the real estate sector. Why? Because if value of the economy starts to increase, rent will have to increase at the same time, meaning real estate will be more profitable than all the other sectors in the stock exchange. So what exactly is a REIT? REIT stands for Real Estate Investment Trusts. They own and manage different type of properties ranging from industrials all the way to the healthcare facilities. So why do I think REITs are inflation proof? Well, by law, 90% of their net income has to be distributed out through dividends to their shareholders. And if prices start to increase in the economy, that means real estates have to start increasing their rents. If the prices in the economy start to increase, that means in the real estate side, they have to start increasing rent, meaning their profit margins will stay around the same. Not just that, their dividend yield is very high. For REIT stocks, 3.6% dividend yield is around the average. That is much higher than the S&P 500s of 1.9 dividend yield. Lastly, REITs offer a lot of diversity into the different types of properties they own into their portfolio. So my first stock on the list is Realty Income, ticker symbol O. This is a lot of investors' favorite REIT stock. This is one of the most popular and most favorite amongst investors. With over 6,000 properties, bringing a lot of diversity into the portfolio, and some of their most popular tenants are FedEx, Walgreens, and 7-Eleven. This stock is one of the most popular because it's one of the very few stocks in the stock exchange that pay their dividends out monthly. They have paid out 600 consecutive months of uninterrupted dividends. They have increased their payouts in 90 consecutive quarters. They even pride themselves on their monthly dividends, naming themselves the monthly dividend company on their website. And a huge plus for Realty Income is that they are a triple net leasing company, meaning that their tenants will have to pay rent, taxes, and maintenance, giving them a lot of room to grow and more money for leveraging. Realty Income's current price is $61.99. They have a dividend yield of 4.55%, which is much higher than the average of 3.6%. They have a payout ratio of 188%. Most REIT stocks will have a high payout ratio because most of their income will have to be paid out through dividends. Their market cap is $21.13 billion. Their PE ratio is 42.29. Their EPS is 1.46. If an investor buys one share of Realty Income, they will be getting 23 cents every month through dividends. Second on the list is WP Carey, ticker symbol WPC. And just like Realty Income, they are a triple net leasing company. Again, meaning that their tenants will have to pay rent, taxes, and maintenance, relieving them of a lot of headaches. But what sets them apart from any other company is that they have a very, very diverse portfolio. They have properties throughout the whole segment in real estate, ranging from industrials to office space to healthcare facilities. This company is probably one of the most well-rounded because not one specific segment in the real estate industry is being dominant in their portfolio. But what sets this company apart is that this company is anti-inflation. Their portfolio was built on defense against inflation. 99% of their leasing contracts have contract increases, meaning if value in the economy increases and the value of a dollar decreases, their prices will increase, giving them a lot of room for growth and expansion. WP Carey's current price is $68.72. Their dividend yield is 5.86% and is much higher than Realty Income's. Their payout ratio is 237.3%. Their PE ratio is 39.43. Their EPS is 1.75. If an investor buys one share of WP Carey, they will be getting $1.04 every 3 months because WP Carey pays their dividends out quarterly. So my third inflation-proof stock in the REIT section is Welltower, ticker symbol WELL. Welltower specializes in the healthcare sector in the real estate. This is the largest healthcare REIT stock with over 1,600 properties ranging throughout the whole healthcare sector except medical research. With over 1,600 properties throughout the whole segments of the healthcare, like senior housing and medical centers, 63% of their income comes from senior housing. 27% of their income comes from outpatient medical properties, like hospitals and medical clinics. What sets them apart is that they excel in parts where their competitors lack. For example, they are up 2.8% in senior housings and medical centers, meaning they have more properties under their portfolio. They also do buy existing properties, and sometimes that is beneficial because they will already be inheriting existing and qualified patients. Welltower's current price is $51.38. Their dividend yield is 4.37%. Their market cap is $21.29 billion. Their payout ratio was 103.88%. Their PE ratio was 16.54. Their EPS is 3.08. If an investor purchases one share of Welltower, they will be getting 67 cents through dividends, and Welltower pays their dividends out quarterly. Inflation-proof real estate stock number 4 is STOR Capital, ticker symbol STOR. STOR Capital specializes in single-tenant operational real estate, properties like restaurants, supermarkets, and gyms. They are also a net leasing company, meaning that their tenants will have to pay rent, maintenance, and taxes. This company is more inflation-proof than pandemic-proof. When the pandemic hit the first time, 17% of tenants in STOR Capital paid rent on time. STOR Capital's current price is $24.26. They have a dividend yield of 5.29%. Their payout ratio was 106.15%. They have a market cap of $5.99 billion. Their PE ratio was 19.08, and their EPS is 1.28. Next is Duke Realty, ticker symbol DRE. Duke Realty specializes in industrial retail space. They are one of the oldest REITs on the market. They have been open since 1972 with 155 million square feet of space. They are a component of the S&P 500, meaning they are one of the top 500 companies in the United States. They have properties all over the United States as well. Duke Realty is very client focused. They try to get the best quality properties to ensure growth in their clients' businesses and properties to also benefit them with their amenities. Duke Realty is currently trading at $35.45. Their dividend yield is 2.57%. Yes, it's a little bit lower than the real estate average, but it's still higher than the S&P 500's 1.9%. Their payout ratio is 81.08%. They have a market cap of $13.11 billion. Their PE ratio is 32.30. Their EPS is 1.10. If an investor buys one share of Duke Realty, they'll be getting 23 cents every 3 months because Duke Realty pays their dividends out quarterly. Now, last but not least, my number 6 real estate stock that is inflation proof is Prologis, ticker symbol PLD. What sets this company apart from any other company, and not just in the real estate sector, is that they have a top tier balance sheet. They have an A-rated credit and lots of liquidity. They are the largest logistics real estate company on the market with over 4,600 properties and 5,500 tenants. They also have a very diverse portfolio because they have properties all across the globe through US and through China. Their properties are very key distribution centers for a lot of e-commerce businesses. We all know how e-commerce is very up and coming, and this gives a lot of room for growth for Prologis. I believe this stock is inflation proof because of their balance sheet. Their balance sheet is nothing to compete with against any other company or any other stock, not just in the real estate side. Prologis' current price is $92.56. They have a dividend yield of 2.44%, a market cap of $67.85 billion. They have a debt to asset ratio of 33.14%, a payout ratio of 83.14%, a PE ratio of 35.11, EPS 2.62. If an investor purchases 1 share of Prologis, they will be getting 58 cents every 3 months because Prologis pays their dividends out quarterly. So alright guys, those are my top 6 inflation-proof stocks. Please let me know what you guys think about them down in the comment section. And if you guys did like the video, make sure you hit the like button and subscribe to the channel. Until next time.